Welcome to Talk Tickers. We're diving deep today into the latest earnings call from Yatra.
That's right. Covering their fourth quarter and also the full fiscal year ending March 31, 2025.
And the overall message seemed pretty positive, right? Resilience, strategic growth.
Yeah, definitely momentum. They're really trying to position themselves, as a top corporate travel provider in India. Seems like things are clicking.
Okay, so let's jump right into the numbers then, see what the full year looked like, fiscal 25.
All right, so annual revenues hit INR 7.9 billion. That translates to roughly 93.1 million US dollars.
And then the growth there was pretty significant.
Oh, yeah, a big jump, 90% year over year. That's substantial growth on the top line.
But it wasn't just revenue for revenue's sake, right? What about profitability metrics? Adjusted EBITDA.
Good point. Adjusted EBITDA for the full year was up 28% compared to the previous year. Came in at INR 344 million, which is about 4 million US dollars. So solid growth there too.
And the really key metric, adjusted profit. Did they cross the line?
They did. That's the big story, I think. Adjusted profit reached INR 24 million, around 0.3 million USD. Now, that might sound small, but it's a positive turn.
A huge swing, actually.
Exactly. 106.5% improvement year over year. Getting into the black is a major milestone.
Absolutely. Okay, so that's the full year picture. What about the most recent quarter, Q4, ending in March?
Q4 performance was even stronger in some ways. Revenues hit INR 2.2 billion, call it 25.7 million USD.
And the growth rate?
Even higher year over year for the quarter, up 114%. So accelerating momentum into the end of the fiscal year.
Wow. Okay, but let's look under the hood. Revenue less service cost their gross margin, essentially. How did that look?
Still strong growth there, too. Gross margin for Q4 was INR 1.1 billion, roughly 12.8 million USD. That showed growth of 34% year over year.
So healthy growth, even if not quite matching that triple-digit revenue jump.
Right, which is expected sometimes, but still, solid flow through. And the adjusted EBITDA for Q4 reflected that. It came in at INR 90 million, about 1.1 million USD.
Up 23% year over year for the quarter.
That's right. And they mentioned their adjusted EBITDA margin relative to that gross margin was 8.2% in Q4, kind of a key efficiency metric for them.
Okay, so clear momentum, especially late in the year, and hitting that full year profitability mark. What did management say was, driving all this?
Well, the big engine, according to the call, is definitely corporate travel. They really hammered that home.
They're seeing success signing up new clients.
Yeah, quite a bit. In Q4 alone, they onboarded 35 new corporate customers. And these aren't small deals. They expect about INR 1.4 billion in annual volume just from those Q4 additions.
That's significant from one quarter. And for the full year.
Even more impressive, 148 new corporate clients signed in fiscal 25. The expected annual volume from those is pegged at INR 7.5 billion.
So they're building a really strong pipeline of future business. How are they achieving that?
It sounds like a focused effort. They've expanded their corporate sales team across India, really zeroing in on key sectors, IT, manufacturing, FMCG, consulting, that sort of thing.
Targeting specific industries.
Exactly. And they said this strategy has actually quadrupled their sales pipeline. So it seems to be working. It's not just luck, it's strategic expansion.
Okay, interesting. Now, you mentioned something earlier that sounded like a real accelerator. The MPIE business. Meetings, incentives, conferences, events.
Yes. MICE. They definitely called this out as a standout. Significant growth, yes, but also, importantly, margin expansion, particularly strong in Q4.
And this ties into an acquisition they made, right? Globe Travel.
Precisely. The Globe acquisition seems to be paying off handsomely here. Yatra is leveraging Globe's deep expertise and their existing client list, specifically in MC.
Letting them grab a bigger piece of that high margin pie.
Exactly. Faster than they could have alone. Plus, Globe brought in a different set of clients, not much overlap, which opens up great cross-selling opportunities.
Right. Cross-selling like their hotels or that expense management tool they have. Recap.
Spot on. They mentioned hotels and Recap specifically. And the scale they've already reached together is quite something. The combined platform handled over 600 trips, serving more than 80,000 travelers.
Just in the last 9 months of the fiscal year.
Just in the last 9 months, yeah.
And the market opportunity for MIC in India is substantial, isn't it?
Huge. They cited figures suggesting it was around $3.3 billion in 2023, but forecast to grow to maybe $10 billion by 2030. That's an 18% CAGR. Massive runway.
So Yatra's jumping in aggressively.
Very aggressively. They even made a pretty bold claim on the call.
Oh. What was that?
They believe the combined Yatra Globe entity is actually on track to become a top 3 player in Indian MIC this fiscal year.
Wow, that's much faster than they initially thought, right? Wasn't it like a 3-year plan?
It was. So that really speaks to how well that Globe integration seems to be working and the opportunity they're capturing.
Okay, shifting gears a bit to their own tech. What about that expense management platform, Recap?
Recap's getting some traction too. They mentioned multiple customers are now live, actually using the solution.
And the feedback.
Positive, according to them. It validates that, the platform meets a real need for corporate clients.
And the potential there is both cross-selling to existing clients
And broader opportunities, across India and maybe even some select international markets down the line. They see it driving deeper engagement, making clients stickier, and also boosting the overall margin profile as adoption scales up.
Makes sense. What about other tech advancements? Anything on the distribution side?
Yes, NDC, new distribution capabilities. They highlighted their early adoption here. Yatra said they were one of the first travel management companies, or TMCs, in India to integrate NDC offerings from airlines.
Developed with IATA, the Airline Association.
That's right, and this is important for corporate clients.
How so? What are the benefits?
Well, it potentially gives access to more flight options, maybe better pricing, like exclusive fares airlines only offer via NDC. It's not stuck in the old systems.
So, more choice, potentially lower costs.
Exactly. Plus, real-time availability, dynamic pricing, more personalized content, and it helps with tighter policy compliance, too. They can build rules right into their self-booking tool. It makes the whole process smoother, more transparent.
So it's a tech edge for them in the corporate market.
Definitely positions them as being forward-thinking, using the latest airline tech to benefit their clients. That's a strong selling point.
Okay, let's touch on the B2C side, the consumer air travel business. That's faced some headwinds, right?
It has. But they said the decline in gross bookings pretty much stopped in Q4. It only fell by about 6%.
So stabilizing. How did they manage that?
Sounds like a mix of things. Optimizing discounts, working on SEO for more organic traffic, and importantly, getting more personal travel bookings from people within their corporate client base.
Leveraging that corporate connection.
Right. And based on this stabilization, they expect to see gradual growth returning to B2C starting in Q2 of this current fiscal year.
Though they did mention that geopolitical issue in April might have slightly delayed that Q1 recovery.
Yeah, that temporary disruption probably didn't help kickstart growth as early as maybe hoped.
Okay. And AI. Everyone's talking about AI. How is Yatra using it?
They mentioned using it on both corporate and consumer sides to enhance the experience. But the really interesting corporate application was this no fare finding tool.
No fare finding. Sounds intriguing. How does it work?
It's pretty clever. It's an AI-powered tool that works after you book. It uses machine learning to constantly scan for fare drops on your specific booked flight.
Even after booking?
Yeah, right up until about 6 hours before departure. If it finds a lower fare, boom, it alerts the traveler.
Giving them the chance to rebook and save money.
Exactly. That's tangible value delivered proactively. Builds a lot of trust, you'd imagine.
Definitely. Anything else on AI?
They also mentioned developing intelligent bots, using LLMs, large language models, to automate customer service for emails and calls. The clear goal there is cost reduction in service operations, drive those costs down near term.
Makes sense. They also talked about some awards, right? Industry recognition.
They did. Highlighted a few from major airlines. Singapore Airlines named Yatra their top travel partner in India.
Nice.
Air Canada gave them their Travel of Excellence Award. And Etihad Airways recognized them as a top partner in Asia.
So validation from key suppliers.
Exactly. It reinforces their brand, shows strong partner relationships, and underlines their position as a preferred high-volume platform. It's not just fluff. It speaks to their operational clout.
Okay, let's zoom out now. Connect Yatra's story to the bigger picture in India for investors.
Right. The call really framed India's travel industry as being in a transformative phase. Huge potential.
Especially corporate travel.
Especially corporate. They cited an IMARC forecast putting the current Indian corporate travel market at $42 billion.
And expected to grow significantly.
Significantly. To $80 billion by 2033. Almost doubling in about a decade.
Wow. What's fueling that massive growth?
A confluence of factors, really. Globalization, more MNCs in India, big infrastructure investments, rising online usage, digitization.
Airline partnerships, that bleisure trend.
Right, business and leisure blurring, general industry improvements, and of course that booming MIC segment we talked about. It all creates a very positive environment.
And this is all happening against the backdrop of India's broader economic rise, right?
Absolutely. India's GDP is nearing $4 trillion, fourth largest globally, aiming for third by 2028.
And that growth is trickling down.
It is. GDP per capita hit $2,700 in 2024. Now, that might not sound huge globally, but it's a six-fold increase in just 2 decades for India. Rising incomes mean more disposable cash for travel, both leisure and business. It unlocks opportunity.
Okay, so a strong macro tailwind. What about Yatra's own financial footing to capture this? Cash position.
Pretty solid. They ended the fiscal year with cash, equivalents, and term deposits at INR 1960 million. That's about 23 million USD.
And debt.
They've been managing that down. Gross debt decreased over the year from about 7.5 million USD down to roughly 6.4 million USD. Gives them flexibility for growth and investments.
Good discipline. Now, a really important point for existing investors that share convertibility issue. Any updates?
Yes. They gave an update, said substantial progress has been made. They believe they've actually defined a structure now that should work across the different legal jurisdictions involved.
But no firm timeline yet?
Not yet. They were upfront about hurdles and complexities remaining. Can't commit to a date, but they stressed they're putting significant effort into it over the next couple of months.
Expecting more clarity soon then?
That's the hope. They see this as really critical for aligning better with the Indian market and unlocking shareholder value. Simplifying things.
Got it. Okay, looking forward guidance for fiscal year 2026.
They gave preliminary guidance, targeting 20% growth in revenue less service costs, so gross margin growth of 20%.
And on the bottom line, adjusted profit.
Targeting 30% growth in adjusted profit.
Ambitious targets. What are the pillars supporting that outlook?
3 main things. Continued expansion in corporate travel, scaling up MIC and hotels further, and getting the full benefit, the full cost synergies from that globe travel integration.
Makes sense. Did they mention seasonality? ICE can be lumpy, right?
They did acknowledge that. Said fiscal Q2 is usually the strongest quarter for IC, so that will cause some seasonal bumps in margins and profit through the year. But they're still confident in hitting the overall annual targets.
Okay. And finally, did they address any recent external disruptions, like those geopolitical tensions mentioned earlier?
Yes, they touched on that April disruption, said the month started strong, but then the incident and tensions caused a brief slowdown, especially impacting travel in or out of northern India.
Which is a significant region for them.
Quite significant. They said over 30% of their business volume originates or terminates there. So yeah, if things escalated further, that's a potential headwind impacting a large chunk of business.
But things stabilized relatively quickly.
Apparently so. They worked with partners, and booking volumes recovered promptly once the ceasefire took effect, except maybe in the directly impacted zones where demand is normalizing more slowly.
And the slight bump in operating costs wasn't related to that.
No, they clarified that. Said the higher OPEX was mostly due to legal and professional fees for the share conversion structure work, plus adding Globe's numbers for the full year, not operational issues.
Okay, good context. Right then, let's move to our segment. This is not financial advice.
Disclaimer time. This is purely hypothetical, illustrative, based only on what we heard in the earnings call. Please do your own homework.
Absolutely. So what's an outrageous but plausible trade idea based on this call?
Okay, here's one to chew on, hypothetically speaking. Consider a long position in Yatra. The thesis, it's sort of twofold.
Go on.
First, the market might be underestimating just how quickly the MIC segment, supercharged by Globe, is growing and improving margins. Maybe it outperforms expectations faster than people think.
Okay, betting on MIC execution speed. What's the second part?
The second part is a catalyst bet on that share convertibility structure. If they manage to resolve that in the next few months, like they hinted they're working hard on,
That'd unlock value by simplifying the structure, improving accessibility for Indian investors.
Exactly. It could remove an overhang and help the stock better reflect the underlying business momentum. So it's a bet on rapid execution in MAC, plus the potential resolution of that structural complexity happening sooner rather than later.
Interesting. A bet on execution and structural alignment resolving. Plausible, certainly.
But definitely outrageous enough for this segment.
All right. So wrapping this up, Yatra's fiscal 25 showed strong results, That crucial turn to profit, real momentum in corporate, and especially MAC.
Yeah, underpinned by strategic tech investments like NDC and AI, progress on that convertibility issue, and a positive outlook for FY26, even with navigating some bumps.
The focus seems clearly on those high-margin segments, operational improvements, and smart integration, like with Globe. So here's a final thought for you, the listener, to mull over. Given Yatra's very specific focus now on corporate clients, on MAE, and using tech like NDC and AI, tailored for them, how might their path start to look different from maybe the more traditional consumer-focused online travel agencies in India over the next few years?
Are they carving out a distinct, higher-value niche?
That's the question, right? Are they playing a different game? Something to think about.
It certainly seems that way based on this call.
We'd love to hear what you think about Yatra's performance and strategy. Thanks for tuning in to Talk Tickers.